This week we have 4 messages. Number 1, it's the end of the quarter. So let's have a review of the quarter. Number 2, within the context of the quarter, what about bonds? They were strong performers. Point 3, central banks, dominant in the quarter and also this week with Fed Chairman Yellen. And number 4, forward-looking, what do we think about the economic and financial market outlook? Point 1, in terms of a review of the quarter, it's simply about recovery. So if we put it in terms of the FTSE 100, at one stage we were close to 5,500. And we closed close to unchanged, circa 6,100. So quite a big recovery. And that's been mirrored across the world in most markets. So a bit of recovery in equity markets in particular, and better performance in portfolios. Bonds. So bonds have been strong performers in general, especially government bonds. And I've been asked by many clients to talk about bonds. For example, 10-year gilt started the year at 2%. So over 10 years, you're going to earn 2%, yet returned a healthy 5% over the quarter. How does that work? Essentially, we'll have 5% in the quarter, and the next, if you like, 9.75 years, we'll have a lower return of 1.5%. Main message from Coutts, they are a diversifier, but low expected long-term returns. So the extent of gilts in the portfolio is smaller than we normally would have. Point 3, central banks. Generally, they've been supportive over the quarter. We saw the ECB, which we've talked about previously. This week, it was all about the United States, Fed Chairwoman Janet Yellen. Very, very so-called dovish. What does that mean? That means less rate hikes coming. And she used the words that we have to be exceptionally cautious with respect to interest rate rises. That's very favourable for the market long term. Point 4, economic and market outlook. Just step back a bit. We had a healthy revision here in the UK to Q4, that was last year, but GDP has been upgraded. And that's a theme I think we'll see this year, is that upgrades in growth. It's not strong economic growth, but it's not a recession, definitively. That's the Coutts view. In terms of markets, Q2, frankly, who knows, it's just a quarter. But generally, over the longer term, and certainly over the course of the year, we expect positive returns from risk assets, equities, high-yield bonds, investment-grade bonds.